I have been saying for a while now that Main Street Capital is by far one of my favorite dividend growth, monthly paying dividend stocks that I've been personally buying for years. Now, Main Street Capital just reported their third quarter earnings report, and the outcome was better than expected. In this video, we're going to analyze Main, see what Main Street Capital currently has to offer, and if or if not the over 7% starting forward dividend yield plus bonus dividends is worth investing into as of right now. Now stick around, drop a like down below, and let's get right into it. Now, first of all, heading over to the Main Street Capital website, in case some of you might be new when it comes to Main, it says Main Street is a principal investment firm that primarily provides long-term debt and equity capital to lower middle market companies and debt capital to middle market companies. It then says Main Street Capital's portfolio investments are typically made to support management buyouts, recapitalizations, growth financings, refinancings, acquisitions, and other things. Now, as you can see right here on the website, Main Street Capital invests into tons of different companies, and in my opinion is one of the highest quality business development companies in the entire market. But to get a little bit deeper into Main Street Capital's most recent performance, year to date, the stock is up 12.16%, and that's not even including the massive dividend that Main offers. Now, Main currently is trading towards the higher end of the 52-week range at around $40 per share as I film in this video, but luckily for me, I was able to snag a bunch of Main under $30 a few weeks back. Now, zooming out, Main Street Capital has performed very well as far as just stock prices, up 219% on the max time frame. And remember, for higher yielding stocks and ETFs, you're not really always going to see that much growth, which is one of the reasons that Main Street Capital is so impressive to me. Another very impressive aspect to Main Street Capital is that if we were to have invested just $10,000 into Main Street Capital and $10,000 into the S&P 500 on October 9th of 2007, which is when Main Street Capital went public, the average annual total return for Main Street Capital would be 15.74%, where the S&P would just be 8.56%. And I get it, a lot of times throughout the market, when a stock or even ETF is yielding north of 7%, a lot of times they can be looked at as somewhat of a dividend trap, but Main Street Capital, in my opinion, is far from that. And speaking on if or if not Main Street Capital is a potential quote-unquote dividend trap, looking at Simply Safe Dividends, they have Main Street Capital's dividend as a 62 on the dividend safety score, which again is sort of rare to see in the 7 or 8% dividend yield range, because a lot of times there is a little bit of risk associated with that high of starting dividend yields. But most importantly, what many of you probably came here to see, the Main Street Capital third quarter 2023 results are in, and after I read through this for myself, because I personally own a ton of Main Street Capital, I had to make a video about it and I had to share this with everyone else. So it says right here, the third quarter 2023 net investment income of 99 cents per share. Third quarter 2023 distributable net investment income of $1.04 per share. Net asset value of $28.33 per share. Now, some of the third quarter highlights were net investment income of $82.2 million, or 99 cents per share, distributable net investment income of $86.2 million, or $1.04 per share, total investment income of $123.2 million, an industry-leading position in cost efficiency with a ratio of total non-interest operating expenses as a percentage of quarterly average total assets operating expenses to total ratio of 1.3% on an annualized basis for the quarter and 1.4% for the trailing 12 months period ended in September. Now, net increase in net assets resulting from operations of $103.3 million, or $1.25 per share. Also very important, declared regular monthly dividends totaling around 70.5 cents per share for the fourth quarter of this year, 2023, or 23.5 cents per share for each of October, November, and December, representing a 6.8% increase from the regular monthly dividends paid the same time last year, which is a nice increase, especially when you're getting paid this high of a starting yield. Now, also very important, declared and paid a supplemental dividend of 27.5 cents per share, resulting in total dividends paid for the third quarter of 2023 of 96.5 cents per share, and representing a 29.5% increase from the total dividends paid in the third quarter of 2022, and a 7.2% increase from the total dividends paid in the second quarter of 2023. So with the supplemental dividends that Main has been paying as of recently, it's really boosting the amount of yield that investors like myself are receiving, which is absolutely incredible. Now, finally, it says in commenting on Main's operating results for the third quarter of 2023, we are pleased with our performance in the third quarter, which included continued strength in the underlying performance of the majority of our lower middle market and private loan portfolio companies, and significant contributions from our asset management business. Our results were highlighted by the return of equity of 18%, which highlighted the strength of the current investment income generating capabilities of our existing investment portfolio and the unique benefits provided by the equity investments in our lower middle market investment portfolio and by our asset management business. He also said we believe that these results demonstrate the continued and sustainable strength of our overall platform, the benefits of our differentiated and diversified investment strategies, the unique contributions of our asset management business, and the underlying strength and quality of our portfolio companies. He also said based upon this strong performance, our distributable net investment income in the third quarter will exceed the monthly dividends paid to our shareholders by 51%, and the total dividends paid to shareholders by 8%. This performance allowed us to deliver significant value to shareholders while still conservatively retaining the meaningful portion of our income and growing our net asset value per share. And then he goes on to talk about the dividends that were paid that we just went over. So after that amazing earnings and the way that Main Street Capital has been performing year to date and even before then, Main Street Capital will remain a large portion of my portfolio, and I'm personally going to continue to buy more and more shares from here. But now in the comments, I want to hear from you guys down below. Do you currently own Main Street Capital, and are you not buying more at these levels? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.